I'm Colin Jones. I run Outerlands Capital. We're going to talk about the death of altcoins, which I think will be pretty interesting. But let's do some quick intros. Regan, we'll start down on the end. You want to do a quick intro, and then we'll fire it away.
I'm Regan Bozman. I help run an early stage venture fund called Lattice. And prior to this, I worked at a business called Coinlist that helped launch probably 20% of the top 100 tokens by market cap. So there's been way too much time talking about altcoins.
Hi guys, I'm Avi Felman. I'm the founder of 1000X Media, which is a financial news network. And prior to this, I was a PM at Golden Tree, running their alternative assets crypto book, and then also before that at Block Tower, running the liquid fund for about 2.5 years.
Max Williams with Runa Digital Assets. We're an institutional crypto asset firm. We invested in liquid tokens, liquid equities, kind of all across the crypto ecosystem.
Vanessa Grellet. I run an early stage VC fund called Arche Capital, and I have a book coming out on investing in crypto in October. So don't forget to sign up.
Very exciting. Okay, so I want to kick it off by trying to define what we're talking about up here when we say the death of altcoins. So if you think of crypto as maybe like a $2.3 trillion asset class, and Bitcoin's about 60% of that, let's say Ethereum's like another 10%, we're talking about 30% of crypto maybe is an altcoin, but it doesn't really seem fair to me to put Zcash, Hyperliquid, and Pepe, or Bonk, or Trump Coin all in the same category of alts. So in 2026, what do you think about when you think about altcoins? Let's talk about that universe a little bit. Vanessa, do you want to take it
So
off?
I think about altcoins as any early stage investment startup. 90% will fail, 10% will get to Series A, and 1% will become unicorns. So the expectation in the altcoins is that you have millions and millions of altcoins, most of which will fail, and some will find product market fit, and some will succeed in the market. And that's where you see the disconnect, where you're talking about altcoins and altcoins. Maybe there are some that are successful, like Zcash and Hype, because they have a very different value proposition and success. But think of it really as a high-risk startup that has liquidity after a Series A, which never happens, right?
Yeah, I tend to agree. We also break down the space across 5 different sectors. So you have things like currency and store value tokens like Bitcoin and Zcash, to DeFi tokens like Hyperliquid, protocols like the L1s. So that just helps kind of organize how to think about something, how to compare it to its peers, and assess its value. But there's definitely some that are, I think, at the very early stage. It's not clear cut what metrics I think are going to drive the value, but I think that's part of being an investor is digging in and understanding.
I think it's useful to go through the history a little bit to understand how to delineate these things. So obviously, in crypto, you start with Bitcoin. And what altcoin meant after the launch of Bitcoin were all of these competing currencies that were launched by people to try to compete with the monetary value of Bitcoin. And that kind of worked. It didn't really work. You have some that still stuck around, like Litecoin is still in existence today. Most of these faded out and didn't go anywhere because they couldn't accurately replicate what Bitcoin had and the network that did. So then what people realized is if we want to launch things in crypto, we're going to need to at least try to assign them value. So we came up with this concept of utility tokens, which was you offer some sort of service and you use the token of that network to pay for the service. And this was a little bit of what Ethereum was. It's what Chainlink was when it first came out. All these different things where you're actually paying to access a service. And that model itself worked for Ethereum, and then downstream has maybe worked a little bit for Solana and some other L1s, but hasn't really proven itself out to be a substantially valuable model. And so then DeFi comes along in 2020 and 2021, and it says, well, we're actually going to have a token associated with a company or a product, right? So something like Aave launches a token, and it's associated now with the product that Aave actually offers. Or you have something like a Hyperliquid, which has buybacks directly related to the product offering that actually makes revenue. And so we've kind of gone through the last few years an evolution. And I think what we've landed up on now is we've landed up on, well, they're meme coins, and then they're things that actually generate revenue, and you push that revenue back to the tokens, and that's kind of where we are now.
Yeah, we try to think about it as there's a universe of investable assets. Hyperliquid is maybe the canonical example where it is an exchange, there are trading fees that goes to token holders. And then I think part of why the market has been so challenging is basically everything else, excuse my French, is like dog shit. WorldCoin or Celestia or Pepe the Frog, these are largely tokens that entitle you to nothing. And I think the vast majority of the market represents those assets. And that's largely why like the market has gone down so much. But I think you've honestly seen bifurcation, which is signs of a healthy market, where assets like Hyperliquid, where like you are entitled to a portion of revenue, just like an equity, those have outperformed significantly over the last few years.
Yeah, I think that's really interesting, and these are all great points. So let's dig in on that a little bit. When we're surveying all of the altcoins, and we can talk about Hyperliquid working, are we figuring stuff out? I mean, present company excluded. Some would accuse the venture community of just forcing founders to launch a token for no reason because it's a quick liquidity event and they can get some DPI back to their investors, and that most of these tokens never needed to exist in the first place. Avi, you alluded to it a little bit, so maybe we'll start with you. But are tokens broken? What does work now? What have we figured out over the last 5 to 7 years? And are we going to correct some of these errors we've made in the past of just launching meaningless tokens, or do you think that's the only...
I mean, I think we're always going to be launching meaningless tokens. I think it's just become a new form of gambling that is probably never going to go away because there are aspects of it that you can't really replicate elsewhere. I mean, with meme coins specifically, there's always going to be animal spirits. If somebody sees something go up 100x and somebody turns $10 into $10,000, people see those stories and they like it. And so there's always sort of just like this cycle. And you saw that there were basically no meme coins that went anywhere for a long time, and then somehow Ansem gets to like 400 million. And it's just like, but the question is that the game that you want to play, right? It's like, it is kind of just rolling the dice and seeing what happens. And some people will make money on it, some people won't make money on it. It's not a game that I particularly enjoy playing anymore because I think that there's really no edge to it. But then on the other side, I think what we've coalesced on is we've actually just recreated equity in many ways, but equity that is very transparent in the amount of money that you are getting if this product is successful. It's like, okay, if Hyperliquid makes money, you're getting X percent of that revenue and it's being used to buy back the token, and that's where the value. If Pump.Fund makes X amount, that money is going back to the token. And so I think we're just, right now, one thing that I've always said is that in crypto, we tend to recreate from first principles what happened in traditional finance, and we're like, oh, well, that's why you actually have contractual obligations. If you're an equity holder, you can. There's some recourse here, and I think we're just going to head in that direction, but just with better back-end infrastructure.
Okay, there was a lot in there that I want to break down, and maybe Max, you can kick it off. But you mentioned like the crypto casino that we talk about, just the gambling, and I don't think any of us up here are really interested in that side of the market. But certainly, all that speculation has helped altcoins sustain their existence. Some stuff works. So you mentioned like some high quality tokens like Hyperliquid or something, but then that also has like token and equity Venn diagram overlap. So let's maybe, Max, start with you on like, what do you think works in tokens, and is everything broken? Or when you're evaluating a project, what are you looking at? Because I think somewhere in the last 7 years, all of us got all dreamy about shared scale economics and community and launching network businesses that benefit the users. And what do you look at when you look at a project to determine if that token is structured well?
Yeah, I think you need to have a clear understanding of the path to value accrual to the token. That doesn't necessarily mean, I think, over the past 6-8 months, people have gotten all obsessed and worked up about buybacks. You have to have buybacks turned on. I don't believe you have to have them turned on, and it can still be an investment we're willing to take. Now, at some future point, I want to understand how I might have the option to have buybacks turned on. To Avi's point, very similar to equities of no early stage technology company has buybacks turned on. So I think we should think about that. But I think the problem is, a little bit to Regan's point, of so many tokens have taken advantage of, I think, the early liquidity. For a while in crypto, we got, I think, fixated on the idea that liquidity is a feature, not a bug. But I think that was wrong, and I think it became a bug. And so I think the venture firms took advantage of that a little bit of like, hey, we can get liquidity on this thing, whether it has product market fit or not. To WorldCoin, Celestia, whatever else you mentioned, I think are good examples of the team, the investors all got liquidity, and there was no product market fit, and that worked against them as those projects are kind of faltering. So I think we look at, does it have product market fit? Does it have top line growth? And then we can assess the tokens. Not every token that has top line growth, I think, fits our characteristics, but I want to understand how I might have a claim on some of the economics of the project. Like I think Morpho is if Hyperliquid has the value accrual turned on today, Morpho's one that does not have it turned on today, but I feel pretty confident that in the future I'll have the ability to participate in the economics of that protocol.
I think the quality of the founders is the key to this, because if they don't have a solution for the token economics, they'll figure it out if they're a good team. Obviously, there's like 70% of scammers out there, people who want to get, a quick fix with a token. You'll have founders selling tokens when they're not supposed to, with market makers. It's really tough out there. So the quality of the founders, I think, is the first criteria. Second one is I really like the fair launches, because the issue with the performance of the tokens is that, as with the IPO, you have unlocks over a period of time, and they're just like destroying the value of the tokens if it's not well managed. And so most of the teams don't know how to manage that. And so you end up, with just the price going down, going down. The third one is the token economics. Not every founder knows how to do that well. Obviously restricted or finite supply seems to be working pretty well for a lot of projects. So I would look into that, and that would be my 3 criteria.
Okay. So then let's talk about token versus equity, because you said maybe are we just recreating equity using tokens because it's more fun? Why do we need a token today? Hyperliquid. So don't talk about Hyperliquid, because that's obviously the best example of something that launched without any venture funding, without any, selling any equity. What works? Why do you need a token? Is it just like a DEX like that, like customer acquisition costs, like marketing budget? Like, why do we need a token? Maybe Regan, you want to kick it off? You talk to a lot of founders. You see a lot of projects. Which ones do you say, oh, this needs a token, and this one you might never need a token?
I mean, I think what the most exciting thing that is working in crypto today is globally accessible financial markets. Maybe Morpho we can use as an example. You can have, $10 in Ethereum in Nigeria or Saudi or the North Fork of Long Island, and you can borrow money against that. That has never existed in history. And so globally accessible programmable equity, like also could call it tokens, I think makes sense for those types of products. The truth is, it doesn't make sense for most other things. And I think if you talk to most investors here, in 2021 they were probably investing in 75% token things, and now it's probably 20% token things. But for a very small subset of products, which also happen to be the biggest markets in the world, I think a token makes a lot of sense. And so I think that's kind of where the industry has converged, and why things like Morpho are doing very well relative to the vast majority of digital assets.
Yeah, I think one thing that, you excluded Hyperliquid, but Hyperliquid and Morpho, I agree with that example. They're both networks. So I think what a token does is it helps bootstrap the network effects in an early stage, where instead of raising a very large pool of capital from venture capitalists, that locks you into one path that you are now beholden to the venture investor themselves and their end LPs on your liquidity path. They want home run outcomes. So if you're not a 10 to 100x, they're not interested, or they're going to run your business to force you to either be a 0 or a 10x as fast as possible. Where I think a token might, to bootstrap those network effects, you don't have to raise that pool of capital and go down that path, and it helps, I think, also incentivize the different stakeholders in a network who you want coordination amongst them, and you can kind of incentivize them by giving them ownership in the network itself.
That's interesting. And Vanessa, you mentioned the startup lens earlier, which I think venture investors are very used to. But in crypto, we're seeing this in a liquid market where we see the prices reflect this immediately. And I think not everybody has got the constitution of the venture investors or the experience to weather that. So is 99% of the altcoin market going to zero, and that we're just trying to find the unicorns in there and pick them out and present those to our end LPs? Or does that have to happen, or is there a world where more than 1% can exist?
I think that's going to happen, and it's happening now. We're in the middle of the bear market. It's been dragging on for a while, so I think investors feel it even more compared to the other bear markets. We were looking at the numbers earlier. So alts are not performing well, but there are outliers that have product market fit, etc. And Clarity Act, hopefully, it's gonna pass. We see that there's progress in the discussion around the ethics. And if it passes and there's a little bit of a bull market, we'll all forget what we just said today and everything is going up. So that's the nature of the cycles in crypto, fortunately or unfortunately. But there are deep issues around macro factors that go against alts and crypto right now. So, until the war in Iran, the interest rates and inflation is not totally solved, we won't see a big pickup or a big move in crypto. If you see how crypto performed against QQQ in the past 2 years, we're underperforming. AI obviously has been a very big narrative, and a lot of the liquidity went out there. So until all that normalizes, the altcoin market is not going to succeed, except for some outliers where we've seen already success.
Well, that makes me very depressed, Vanessa, but I think
So
it's
sorry.
an interesting insight. But Avi, you said
I'm
something
not
in
your
our
cheerleader.
prep call I wanna-
One point here that's actually extremely important is every time I've talked at a conference and a panel gets up and says, "Wow, my God, it's so over, it's so over, it's so over." Here's how you tell if it's actually over, and that's if nobody comes up to me after the panel and says, "Wow, I'm so angry. I actually think that things are going up." If everybody agrees and everybody's like, "Yup, you're right. It's super over. It's done for. No, we're going up. It's going to be great."
And this is where the opportunity is, to be honest, for people who are very deep into crypto and know the protocols and know which teams are good and where it's going. There's tons of opportunities.
There is, and I mean, I think like this is actually maybe one of the best times ever to start allocating to protocols that are making money, as you said, because there's actually there's a lack of attention on crypto. And that's reflected in prices. And what you have to understand is that market is forward-looking, right? And so all of that depression that you're seeing, like, oh, nobody really cares about crypto, well, that's kind of in the price right now in many ways. That's why Bitcoin couldn't really get below 60, even despite the fact that Michael Saylor was talking about selling everything. That's why you're seeing altcoins sort of like hang out on their lows, is because there's kind of not that many people left to sell. Something new is going to have to happen to get people to sell out of their positions, whether that's Clarity getting denied and people freaking out about it, although it's only priced at 30% right now on Polymarket anyway, so it doesn't matter that much. I do think that we're seeing green shoots, and now's, it's a time to do deep dives, as you said. It's going to be important to pay attention.
Well, that makes me happier.
You could also do distress. You say, well, I have all these distressed assets. Let me apply that framework to the alts, right?
So Avi, you said something similar in our prep call, which I really liked, which was everybody hates crypto right now, and that makes me really, really excited. So you're going out there, you're looking at the alts, you're looking at high-quality projects. Like, what else are you doing? But, does the casino have to come back, or do you think that high-quality alts can rip and generate the returns that we're looking for in a world where the speculative casino doesn't come back, and we have this very targeted altcoin season where only the quality alts rip, which has been our thesis for a long time, but we're just seeing everything go down right now. So what's going to change? What's the catalyst going to be in the next 6 to 12 months that's going to reverse course?
It's kind of an interesting question, but I think that basically my model of markets leads me to believe that animal spirits always come back in some form or another. It's just a question of what's going to be sustainable and what's actually going to last. So the way that the crypto market has worked, and actually we're kind of seeing this in the equity markets too now, is that the things that are actually making money are the high-quality assets run first, and then the secondary assets run second, and then you get this period of time, maybe it's like a 4 to 8 week window where all of the, I guess I speak French now too, the dog shit runs. But that's probably that I don't think will ever go away. Like, I don't think that you can, and it's because humans are always going to have a little bit of greed in them. Humans are always going to see something go up 100% and then think to themselves, well, I don't want to buy the thing up 100%. Let me buy the thing that hasn't gone up yet that's somewhat similar. But over and over, what's going to happen is that those cycles are going to look a lot smaller, right? So the altcoin cycle in 2017 versus the altcoin cycle in 2021 versus the mini cycle that we had in 2024, it's just these things are going to compress and compress and compress and compress. But I don't think it's ever going to fully go away, but that doesn't necessarily make it the right game to play, right? I mean, you can try if you're a quantitative person, maybe you're like tracking mentions of specific coins, you're tracking volume across exchanges, you can track some stuff to try to figure out how to play that game, but I think that over time, the best thing to do is just to allocate to the stuff that is actually making money. And fortunately, for the first time kind of ever, we actually have that.
Yeah, I think one point on like the animal spirits coming back, that the one thing that I do think will change over the next, I don't know, cycles in crypto is the quality of the dog shit will get better. And I think that, I think meme coins were maybe the peak of that, but look at last year at this conference, the hottest topic was DATs. I think most DATs ended up being dog shit. But I think there's a purpose for DATs, or there can be. Some of them actually look attractive now on the distress side of they're trading at deep discounts. But I think they weren't absolute zeros. Like they have a balance sheet with assets on them that are worth something. So I think that will start to change. And then I think in terms of what you're looking for things that can actually improve what they're doing. So whether that's new distribution deals, improve their tokenomics. So I think that's what the opportunity are the teams in crypto that are committed to this for the long term, and can they secure partnerships with some of these new TradFi firms coming into crypto to help grow their products? So I think looking at the projects that have been around, have that lindiness, are battle tested, and also are trading at attractive prices. Aave kind of fits, something that looks like that. That they just went through like their, a big distress moment with the Kelp DAO hack, but they survived it. We're kind of on the other side of it, and I think they're big enough. They have a strong balance sheet. The tokenomics look good. There's value accrual. So that's just one to look for.
So you've mentioned founders earlier, and you just mentioned them again. We've spent a lot of time talking to the teams as well. And maybe we'll start with Vanessa, and then I want to go to Regan. On the venture side, what do you look for in these founders? Is it the same thing you look for in any venture investment, or what are you trying to evaluate when you talk to these early stage founders that are going to be faced with early liquidity if they're launching a token, and then wake up every morning going, I just made a bunch of money on my token, but God, startup life is really hard. This kind of sucks. I think I'm gonna walk.
Yeah.
How do you evaluate that?
I think on the personal side of the founders, I think we want to see integrity and conviction. And integrity in crypto is probably the one we optimize most for because there's so many issues. And then whether they really understand the market and they really understand the token economics. And then are they able to assemble a team that delivers? I used to work on Wall Street, and I feel like since I've been in crypto, the level of intensity of the work is a little bit less, to be honest. So I don't know if it's tech or if it's crypto, but I feel commitment and integrity are the two criteria that we're looking for.
And Regan, how about you?
Yeah, I think if you look at venture markets today and bubbly markets like AI, liquidity is getting earlier and earlier, right? You now have a lot of companies that do the tender offers where employees and founders can sell on a quarterly basis. Now, today that is largely companies like Stripe, like Anthropic, that have incredible businesses. But like if this AI bull run continues, that will go earlier and earlier. And you have companies like during the COVID kind of bull run where like founders could cash out kind of, a few $100 million, and like these businesses trended towards zero. So for better or worse, I think venture is kind of following like the dumber parts of crypto markets. Historically, if you look at markets, it is almost never good to invest in the hot thing, right? If you are doing things for, I want to get rich, whatever, like let's simplify it down to that. Crypto is a terrible thing to do today, right? All of us have lost so much money this year. Why would you ever want to start a business in this market?
Speak for yourself, huh?
And if you want to make a lot of money
Joking.
quickly, you would go start something in AI because like there is such a hot bubble of money there. So I think for us at a simple level, if you are still here and trying to build better financial products, you probably really believe in what you're doing. We've invested a lot outside the US over the last year. I think there's a lot of countries where building a better financial system is just a much more tangible problem than it is in the US. And you have incredibly talented founders in places like Nigeria, Argentina, where that is more of a draw than building like the next frontier AI lab, at least today. And so that's how we've responded a bit to, those market conditions.
Okay, so we're getting down on time here. I want to make sure we address it. It's been a very sad couple of years for altcoins by and large. What's 2026 looking like for the rest of the year? What do you think? Is the market going to recover? Are there catalysts sitting out there, or should we just ignore it for another 6 months and revisit in Q1 27?
I think Clarity's a potential surprise catalyst, and then I think to all of our point, to that point, to Avi, your point earlier, like I think price declines are an opportunity that create upside potential. So I think prices are at attractive levels now. But yeah, I think Clarity, even if it doesn't pass, yes, I do think there's maybe a short-term price adjustment. But I think some of the adoption trends, they may still happen. They might take longer. It's just, are we going to take kind of the fast route through Clarity with kind of federal blanket coverage of you can go proceed in digital assets, or kind of the harder path, the state-by-state regulations that some of these regulated financial institutions who want to participate they'll go that route. It'll just take longer, which may prices may take longer, and maybe it is 2027. But I think prices reflect a lot of the pessimism out there today.
I think it's important to remember that markets hate uncertainty more than anything else. And so, as you said, kind of regardless of whether Clarity passes or not, I actually think that the end outcome is probably good for the markets. It's this limbo period where people actually don't necessarily know how to proceed that is causing people to wait. And once Clarity either passes or doesn't, there's at least a path forward for some things. And so things will start to happen again, which I think is going to be good, sort of regardless either way. And the other thing is that when you look at where liquidity has just gone straight into the equity markets. Everyone is trading Korean stocks. Everybody's trading AI, names, semiconductor names. If that cools down, money's going to come back into crypto. If crypto at the same time is coming off of its lows. And so that's something that's really actually a very good setup, is you just had this massive sell-off in AI, and normally it takes a little bit to digest these types of sell-offs. And so that's actually a pretty good indicator for, hey, maybe liquidity is going to come back into crypto because crypto's on its lows right now. So I'm pretty bullish for the rest of 2026 and definitely through 2027.
Vanessa?
For me, macro trumps crypto. So until the macro and risk-on market is not solved, it doesn't change. I don't think we're going to see a huge bull run in crypto. I think in the alt space, there's a lot of irrationality. If you look at Hedera, XRP, all these large coins, when at some point we said, oh, the US coins are going to get a better tax treatment, they all went up, and then nothing happened. So you could have gotten a bump up there. So there's like some macro and micro triggers for specific altcoins that are going to happen, but I think the larger macro situation is an issue for crypto. And we'll see the Clarity Act. I think the impact will be on a few coins, that are related to like Ethereum, Solana, and the EVM and Solana ecosystem, because they're the ones that are the unlock for the institutions, right? So if the institutions trade more on Marfo, Aave, and all the lending pools and all the DeFi, that's going to be a markup for them. But the rest of the altcoins, I'm not sure.
Regan, you said earlier, and I think we'll finish on this. I want everybody a 30-second answer. This is like altcoins right now are maybe a $700 billion market. This is a minuscule market that we spend all these so much time thinking about, so much time talking about. I think we all believe or have believed recently, in the recent past, that it can be a lot bigger and there's something really exciting here. But what is it about this tiny market that just, enraptures us and keeps us interested?
I've been doing crypto for 10 years. I think I'm unemployable doing anything else. So, as long as these markets exist and I'm able to make a living, I'll be here. But I think if you're not excited by globally accessible, programmable financial markets, that is just one of the coolest things that's happened in finance in the last 20 years. And Stripe, Airwallex, Robinhood, every single big fintech that's ahead of the curve is investing tens of billions of dollars in this space. I don't know how you couldn't be excited about it. AI is a gravitational black hole for risk capital. This bubble will pop at some point. I think it has a ways to go, but underneath the hype, there's clearly so much exciting happening here. I don't know why you'd want to do anything else.
Yeah, look, I got into crypto 9 years ago because it was this one big experiment, and that was fascinating to me. And as long as we keep that ethos of we are going to continue experimenting, we're going to continue trying new things, we're going to push the boundaries on what works and what doesn't work, that's enough for me. As long as we've got that, I'm here.
Yeah, I think tokenization is a secular trend. So I think, I think we are shifting a little bit away from some of the extreme experimentation that Avi's talking about into a more kind of institutional frameworks. But I think that's normal of any technology. I think AI is on the first half of that, and crypto's moving into the second half of that. But I think tokenization is a secular trend over the next 10 years.
Agree. I also think projects like BitTensor, Venice, which have very smart token economics and developer incentives, are going to do really well. Especially now with the confluence of AI and crypto, where these crypto projects are just AI projects, but cheaper. And so I think that's a very exciting trend for me that we're looking at.
Good. So this leaves me all very excited. So let's give a round of applause for our panelists, and thank you very much.